The real estate YouTubers have lied to you. You have heard for the last 3 years that prices are going to crash, the market's going to crumble, everything is going to be on fire, which you can see that with every single thumbnail every time you log into YouTube. And the funny thing is that a lot of these people don't even practice real estate. They don't invest in real estate. They don't have real estate licenses or anything even of the sorts. They just look at these numbers and make up things in their head and say, okay, the real estate's going to crash. And they've been saying that for the last 3 years. And those of you that have waited for the last 3 years have only sat on the sidelines and witnessed record appreciation, record price increases, and it doesn't look like it's going to reduce anytime soon. And in this video, I'm going to share with you exactly why the 7 reasons, 5 plus 2, 7 reasons why the market's not going to crash, and why if you don't act sooner rather than later, you're just going to continue to get rained on like I am right now. So I might have to take this inside the car real quick and explain this a little bit more in depth. But if you stick around till the end, I'll share with you some data as well, because we're in the Dallas market. Why, if this is an area that you're thinking about relocating to, which a lot of people are making that move over here from across the country, you want to act sooner rather than later. I'll get into the data on that, and we're getting into it right now. Before we get into the video, make sure you subscribe below, tap the bell for notifications so you can be the first to learn about the current real estate market. My name is Levi, and if you have any questions, feel free to give us a call, shoot us a text, or send us a Zoom, all in the description below, and happy to help you out in any way we can. But also, leave me a comment, let me know what you're seeing in your market. But I want to get into the 7 reasons why we haven't seen and why we're not likely to see a real estate crash coming up anytime soon. And the longer you wait, the more home prices are going to rise, and you're going to miss out on that appreciation and equity that you could have had. Imagine what that could have been over the last couple of years, and I'll share that data with you as well. All right, so number 7 is going to be the baby boomer population, but also mixed in with millennials and Gen Z. That's right, they are part of the problem as well. Over a third of the purchases right now in the real estate market are cash. Think about this, baby boomers are retiring at a record rate, and they have been building their wealth and cash for 10, 20, 30, 40 years, and probably even compounded that over the last 10 years with the way business and technology has grown. And as they retire, think about where they're going to. They're going to a lot of these southern states, Texas, Tennessee, Florida, Alabama even. I mean, you'd be surprised. They are making that move over to the south and southeast areas of the United States. A lot are coming from the West Coast and the north and the northeast. And they are buying with cash. Because of the interest rates being so high, they're not concerned about that because they've got the cash to spend. On top of that, millennials and Gen Z are making more cash purchases than ever before, and they believe that they may be getting help from friends or family members because they haven't had enough time to stack up that amount of cash. However, I would say that the millennials and Gen Zs are richer than ever if you look at what they are doing in the business world today. They are some of the industry leaders whenever it comes to business, and they are making money sooner rather than later. They are making hundreds of thousands and millions of dollars because of the internet, e-commerce, and everything else. And especially with AI now, we're seeing huge jumps in incomes in these generations that we have never seen before. But what you can't do is, if you have a job right now and you're making 50, 60, 80, even 90 or $100,000, it's going to be very difficult for you to save money, especially with inflation the way it's been. I mean, now we're coming down to a reasonable rate, you could say, at 3%, which is still higher than it should be compared to 9% last year, which suck the money out of a lot of people and raise consumer debt to all-time highs. But what you can't do right now is try to compete with the baby boomer who has been working their entire life, the last 50 years, has saved up a lot of money or built very successful businesses, and now they are buying homes with cash. They're moving to southern areas where homes are less expensive than what they're used to. And so if they're selling out of their homes, which they likely are not because they want to hold on to those low mortgage rates, which I'll get into here in a second, then people today are more likely to hold on to their current home, rent it out as a secondary income, or continue to build equity in that first property. Which brings us to point number 6, which is an extremely low incentive to sell. With interest rates being at 3% for the last couple of years, nobody wants to let go of that. I myself bought at 6.5 interest rates and kept my current mortgage on my current house and rented out. Why? Because I refinanced to 2.75 during 2022. I started out with a 5% interest rate when I originally purchased that home in 2019, which, by the way, 5% was considered extremely low, actually the lowest it had been in several years. And I did not even blink twice at a 5% interest rate. I was more than happy to take that. And whenever the rates dropped, I refinanced to a 2.75%. I mean, my payment is at an all-time low. And so therefore, whenever I looked at buying the new house, I wasn't worried about a 6.5 interest rate. Number one, because there's buy downs. You can do 2-1 buy downs or 3-2 buy downs, whatever the case may be. But I bought my interest rate down for the first 2 years. So I didn't get a 6.5. I got a 4.5% interest rate for the first year. The second year is going to go to 5.5%. And then the third year, it'll go to 6.5% if I don't refinance in the next 2 years. And I truly believe interest rates will come down to somewhere around 5, maybe even 4% again in the next 2 years. I'll simply refinance my property and I won't be worried about the 6.5 interest rate that I did. But I also bought a new construction home, which builders right now are offering a ton of incentives to buy down those rates. And so if you don't understand what a buy down rate is, make sure you reach out to me in the description below and find out some more information about that. Because if you really do believe rates are going to come down, or now you're waiting for rates to come down. You see, this is what everybody was saying 2 years ago. They're like, well, every home is going for $20, $30, $40, $50,000 over. I'm going to wait for prices to come down. And what happened? Interest rates went up, but prices have not come down. And now everyone's sitting around, those same people that waited, and they said, I'm going to wait for interest rates to come down. Well, if you believe interest rates are going to come down, then you need to buy now, get a buy down rate, and then refinance over the next year or two. And guess what? Your appreciation in equity is going to increase over that time period. A lot more than it will if you wait and that home appreciates $50,000 and then you save a percentage point on the interest rate. What you also have to realize is that 62% of homeowners right now have a mortgage rate of less than 4%. They have pretty much zero incentive to sell. And again, people will likely hold on to those properties if they decide to buy a second home, and they'll probably rent that out. Number 5 reason is that people are just getting priced out of the market right now. And if you were sitting on the sideline waiting a year or two ago for prices to come down, they haven't. And if you were renting, rent prices have gone up as well. And now prices are up even more, but interest rates are now up with that as well. So now affordability is going to be even further out of range. All right, the number 4 reason is that inventory is at an all-time low still. The current report is that we are short 6.5 million homes in the current market. Think about that. In the US market today, there's just over 500,000 homes on the market for sale. Now, this tweet came out not too long ago that went viral that said Airbnb is a bust and all those Airbnb owners are going to have to sell their properties. And if they do that, there's 1 million Airbnb houses on the market. So that means every single Airbnb owner in America is going to sell their property at the same time. Well, even if that were the case and they did that, that would bring housing inventory up to 1.5 million. And think about it. They're saying we're 6.5 million short. We're still short 5 million homes on the market. So how does that increase inventory or flood the market with inventory? That doesn't even get us back to what they're saying the demand is. On top of that, if it's even compared to 2008, do you know how many homes were on the market in 2008? Just around 4 million. So even at that point, we still would not be even close to the amount of homes that were on the market in the 2008 crash. And that's a huge difference. But let me tell you personally, as an Airbnb owner, why you're not in trouble. And let me not just throw Airbnb into this. Let me say short-term rental. So I own Airbnb. Now, the thing is the reason I love short-term rental is because you can typically make about 3 times the amount on monthly rent than you will on a long-term renter. So what does that mean? If I could rent out my home for $2,000 a month on Airbnb, I could probably make about $6,000 a month. So even if there is an Airbnb bust, which bookings are a little bit down, and I've seen that, it doesn't matter because even if bookings are 2/3 down, I'm still covering my mortgage. Does that make sense? It should, because the thing is that if I'm making 3 times the amount and I get 2/3 less bookings, I'm still covering my mortgage. I'm not even losing money. And I've never experienced that in my entire Airbnb career over the last several years that I've had properties. And what we're seeing right now is last minute bookings are up. So even though if you look at the data right now, maybe bookings out for the next 2-3 months may be down overall, but we're still on our property properties getting 80 to 90% occupancy rates by the end of the month because people are taking last minute trips or looking for last minute deals, or some are not even planning as much in the future, it seems like that they were last year. All right, the number 3 reason is that we're in a seller's market. If you don't know what that means anytime there's 6 months or less of inventory on the market, you are in a seller's market. Anytime there's 6 months or more, actually 6 to 7 months, let's say, that's considered a neutral market. 7 months or above is really a buyer's market. And that tells you the shortage of inventory in the market. So right now, nationally, we're sitting around 2.9 months of inventory. So we're not even halfway to getting back to what's considered a neutral or normal market. However, I would say there could be a little bit of a combination there almost of a buyer's and a seller's market right now. Because interest rates are so high, I do believe that's giving a little bit of flexibility, but it's also having these builders and homeowners more willing to negotiate, even though inventory is still at an all-time low. And what that means is just like I did, I got $40,000 in incentives from my builder. We do this for our clients every single day. We were just at a builder yesterday and we got $25,000 incentives for our client. We sold 28 homes on the buy side in June alone. And people are telling us that the market is crashing and home prices are going down, but we're not seeing that. We're still seeing multiple offers and homes selling for a little bit over, just like it happened in the last couple of years. All right, number 2 is that you have to just really look at the market you're in or the market you're interested in moving in. The thing is that a lot of these videos on YouTube love to target the high fluctuation cities and states. And what we're seeing is that home prices can be all over the place in that instance. But if you look at the southern states, they're pretty stable, pretty consistent, and prices are still on the increase. Now, maybe where people are moving out of, like the West Coast and the Northeast, you will see some fluctuations or even some price changes in those markets. But remember, it seems like every real estate bust or boom, those are the ones that tend to spike and decline quicker than anything. But you look at a market like where we're at in Dallas, and we typically see steady Eddie growth and appreciation. Now, we did have our craziness during 21 and 2022 as well. Not as much as some markets, but now we're starting to normalize, but prices are still going up, which is what I'm going to share with you here in a bit. But even if you look at the national level, or even some of the states like Florida's seen some 15, 17 to 19% in increased prices just this year alone. But when you look at the West Coast, like Oregon, California, or Washington, maybe you see some fluctuation in home prices or decreases on average around 10%. But this is the number 1 reason why I don't believe you're going to see a crash anytime soon in this market. And that's because of the average equity in homes across the United States today. First of all, home prices in the last 3 years have gone from the median of $329,000 up to $436,000. That's over $100,000 in increased median price in the United States. And the average equity in the last 3 years has gone up from $182,000 to $274,000 as the average equity in a home in the United States. So where are all the foreclosures? That's what everyone else is always saying, is that the foreclosures are about to hit the market and flood everything. And well, guess what? If you have an average of $274,000 in equity in a property, do you think you're going to get foreclosed on? Not likely, because you will easily be able to sell that house, especially when inventory is low, actually probably even make some money. So a foreclosure happens when you stop making payments. It doesn't mean you're underwater on the mortgage. And because the average equity has increased by $100,000, even if you were underwater on your house last year, guess what? You're probably positive this year because of that increase by itself. So if you were to get in trouble on your payments and stop paying it, you likely got equity built in, so that gives you plenty of time to sell. And if it's priced right in this market, it's going to go quickly, and it could still even go over asking price. And think about it, for all you millennials and Gen Zs out there, by the way, I'm a Gen Xer, but the thing is that you're always looking for the side hustle, right? If you're in a job right now, the ultimate dream, the American dream, is to own a business, which is where a lot of this equity is coming from, a lot of this cash, a lot of the success. But if you have a job right now and you're always talking about that side hustle, could you imagine if you just bought a house 3 years ago, that would be worth almost $33,000 a year in equity. Is that a nice side hustle for you? That's almost $3,000 a month extra each year if you would have bought a house 3 years ago. But yet every other video on YouTube that you're seeing is everyone's telling you to wait and buy real estate, but you should never wait to buy real estate. You should buy real estate and wait. And even if there is price fluctuations like you see on the West Coast where you drop in equity 10%, think about it. The average equity has increased almost $100,000 in the last 3 years. So what if you lost 10% of that? And now your equity is only $90,000. Well, as long as you're not selling, you're going to bounce back and earn that equity back. But the people that thrive on a scarcity mindset love to point those types of things out. Oh, home prices have dropped 10% and now the market is crashing. But it's like, wait a second, you're still net positive 90%? Because think about 100, we use $100,000 or as 100%. That's it. You know, prices, you gained 100% in your property over the last 3 years. Now it's dropped 10%. So you're still 90% positive than what you were 3 years ago if you bought a home. And if you bought a home 2 years ago, maybe you're around $66,000 in positive equity. If you bought it last year, you could be around $33,000, $40,000 in positive equity. So a 10% decrease in your area, if you bought last year and you gained $40,000 in equity and now your home drops $4,000 in value, is that going to crush you? No. And if you had to sell tomorrow, would you rather take the $40,000 in equity, or let's say $36,000 net positive equity, or would you rather wait and pay the higher price on the home, which you're paying for now? But those are my top 7 reasons why the real estate market's not going to crash, and why the longer you wait and sit on the sidelines, the more likely you are going to just pay a higher price down the road and miss out on a lot of equity opportunity and the true beginning of building wealth for you and your family. Now, if you want to stick around a little bit more, I'm going to get back to the house and I'm going to break down the data here in the Dallas market so you can see everything that's happening right now. What I've done on this graph is I've compared Collin County, which is the county north of Dallas. This is the suburbs. This is the entirely new area where everybody's looking to move to. This is where a lot of corporations and companies are moved to. It's where most of the growth is happening in Dallas. But I also want to look at that compared to Dallas County, but then also look at it compared to the entire MLS. And what you're going to see is a dismal picture for those people that have waited. All right, so let's start here with January of 2022, because this is very important. Now, Collin County, north of Dallas, on average was around $465,000 for the median price. Dallas County around $315,000. So that right there shows you that if you want to get out of Dallas and get into North Dallas, where that demand is moving to, then that's going to cost you about an extra $100,000. But now you can compare that to the entire MLS. Dallas County is right in alignment with the rest of the country whenever it comes to median home prices. But here in January, this is what I want you to know. Yes, we had a peak last year in May and June of 2022. And if you would have bought anywhere in January up to May, you would have had a significant increase. Now, what most people are looking at right now is they're looking at what's happened over since last year. Whenever interest rates went pretty high, they doubled significantly. Actually, they doubled a couple of times over, which got them to 6.5% by the end of December. And what did that do? It did drive prices down. But when you get to January of 2023, what I want you to notice compared to January of 2022, if you would have waited that 1 year, interest rates were up, but what people are looking at is that prices were coming down from the peak. But just from that year difference in Collin County, remember, it went from $465,000 to $503,000. That's still a difference of an 8% increase. That's $38,000 in equity that people that waited from 1 year to the next missed out on. Plus, they're paying a much higher interest rate, so they're getting less of a home on top of that. So not only has the price increased 8%, but because of the interest rate, you're not going to be able to afford as much of a home in the first place. Now, if you look at Dallas County as well, it went from $315,000 to $320,000. Not a big deal. $5,000 in equity, around 2% of an increase. Maybe not that much, but look at what's happened over the last 6 months. Since the beginning of January, we had a slight dip in Collin County in February, but still 5 months of continuous increases. And now that median home price sits at $537,000. You compare that to last year, which was $465,000. Now you've had a difference of actually from just the beginning of the year, around $34,000 in equity, another 7% increase. So overall, just from the last year and a half, even though interest rates have gone up, you're still sitting on $72,000 in equity. And overall, that's a 14% increase in appreciation. And if you compare that to Dallas County and the rest of the MLS, which is very similar, you've had about 69,000 in equity increase and around 18% growth. Tell me, what else could you have invested in over the last year and a half and gotten an 18% return on your investment? On top of that, you would have had a home, and factor in what you've been paying in rent over the last year and a half. If you were paying just $2,000 a month, you gave up $36,000 over the last year and a half. And that is why it does not pay to wait on real estate. If you ask any savvy investor, they buy homes in every single type of market. I buy homes in every market. They buy homes in every market. It doesn't matter if the market is up, down, or sideways. There's always a deal to be found. And if you're a homeowner and you're not thinking about this from an investment side, then that's okay too. But if you're looking at this from a homeowner's perspective, not from the investment side, you have to take the emotion out of it. You've got to put the logic into it and look at the numbers. First of all, we can find a deal in any market, and we are always going to fight for you and try to find you the best deal possible if it's the right time for you to move. Now, that's the other thing, is that you have to give us a call, shoot us a text, or send us an email, or even schedule a Zoom call, which is our personal favorite. And that way we can talk through your situation. If you're unsure of what's going on in the market, the best thing you can do is have a discussion. Look, we're not going to try to sell you on anything. The main thing is trying to figure out if this is the right time for you. And the way we look at it is from a numbers perspective. If the numbers make sense, then maybe you should make a consideration. But I know that we deal with a lot of people that relocate here to the Dallas, Texas area from all over the country. Actually, I just met somebody yesterday at a coffee shop, and they moved down here to do some volunteer work with the church, only here for a couple of weeks, had no plan on moving, but they loved it so much, built up a relationship with the local church, and they decided this was the right move for them. So even though they had no real intention to move, they decided to move and still bought a home in this market because it was the right thing for them and their family. So it doesn't always have to be the case where you're trying to move with your company or with your business, or because you have to, or maybe you marry somebody, maybe you divorce somebody, you have another kid. I mean, those types of situations tend to heavily influence your decision. But you could be just like the guy I met yesterday that moved down here, got a really good feeling and really felt a sense of connection and decided to make the move on his own. And not only did he buy a home, but he invested into a coffee shop and started his business. And I'm pretty sure he got a good deal on the commercial real estate side as well, which he told me he did because he got to take over payments of a property, and it had a $100,000 kitchen already built into it. So that saved him all the costs that he would have had to put up front to get his coffee shop and bakery off the ground. So even if interest rates are not exactly where you want them to be right now, there's still deals out there to be found, and everybody believes that interest rates will come down again. If you've been saying to yourself, I'm going to wait for interest rates to come down before I buy, then you are saying that you believe interest rates will come down in the near future, but it doesn't look like home prices are going to be coming down in the near future. And being short 6.5 million homes also tells us that there's not likely going to be a crash anytime soon. And if interest rates do come down to 6 or even 5%, all those buyers that are sitting on the sideline right now saying the exact same thing, they're going to come out of the shadows. And what's going to happen? You're going to end up paying $50,000, $60,000, $70,000 over on a house again, most likely. And a recent study just came out. New construction sales are up 14% year over year. Think about that. That's also a lot of these videos on YouTube are telling you that the new construction market is going to crash out and they're building way too much. They're really having a hard time keeping up with the demand as well. And right now, everybody is kind of making a move towards new construction, especially here in Dallas, where we have so many communities and opportunities popping up on new construction. And guess what? The builders are the most generous whenever it comes to incentives. They're always motivated to sell. So now is a really good time to take advantage of that. But again, it has to be right for you and your family. And the best thing you can do is give us a call. All of that information is in the description below. That we also have plenty of free resources that you can download. And the main thing is that, whether you're moving in 9 days or 9 months, feel free to reach out. We'd be happy to help you make that smooth move to Dallas. And until next time, well, we hope to show you around town. But that brings us to con number 1 of living in Salina. Is it's about as far north as you can go here in the Dallas-Fort Worth metro.